You're such an asshole.
Hey everybody, strap yourself in, kiddos. It's going to be a lengthy one, though it is a short question. What did he want me to do? He wanted me to do a full, where is it? Hang on. How much for you to do a blog post on Ethereum and its outlook? How to tell whether something like this is in a bubble? I say, dude, for me to do a full-fledged analysis of a cryptocurrency that's younger than my little nephew, and even start, I mean, you're looking at $300 for a full analysis. He's like, oh. I'm like, I could give you some quick and dirty stuff about currencies and taking some laws of economics and currency and applying it to cryptocurrencies for $35. He says, let's do that. I say, okay. So he's a good economist. He says, $300? $35 just for the quick and nasty. And so he decided to go with quick and nasty economics. All right. Aaron, I recently invested in Ethereum and am making good gains on it. I'm a newbie to investing, though. What's the best way to tell if something is in a bubble or overvalued? All right. Now, this is good. I've taken some notes. Now, the way we normally tell whether something is in a bubble is you do a price-to-income ratio. So what's a price-to-income ratio? What you do is you take the price of an asset, an investment, stock, bond, house, company, we won't go currency, but some kind of investment, and you look at it and say, okay, what income does that asset generate? So if you look at a stock, you pay $100 for it. It pays $5 per share in earning. 100 divided by 5, a price to earnings ratio, a price to an income ratio is 20. You're paying $20 to be entitled to that $1 in earnings. Some people prefer to look at dividends instead. So you compare, okay, you pay $100 for a stock, but the company only pays out $2. You may have $5 in earnings, but it only pays out $2 in dividends. So 100 divided by 2 is 50. You're paying $50 in stock to be entitled for $1 in dividends. Some people look at cash flow. When it comes to property, well, properties don't have dividends or income, but it has rents. So when you go into the real estate world, it is priced to rent. So you pay $200,000 for a house. It generates $10,000 in after-tax income, right? After net income. That's 200,000 divided by 10 zeros. Is that price to rents of 20? I think that's a price to rents to 20. I think so, if I did the numbers right. All right? Now, what you then do, and thanks to the internet, is more and more of this data we can go back and we can historically calculate what has been the historical average. I mean, it goes up and down, but what on average do you pay price to earnings, price to rents, price to dividends, price to income, price to interest, things like that, and you get an average, and you say, oh, okay, well, historically, in the case with stocks, the S&P 500, historically, people have paid $15 to be entitled to $1 in earnings. That is the price to earnings. And then you look at it today, you say, okay, what is the stock market trading at now? It's at 26. So the stock market is like, a good 60% overvalued, based on history. Other people will say, well, this time it's different, it's different, it's different. I see there's reasons for it. I'm like, I understand there's reasons. I'm just saying it's like paying $5.23 for a Big Mac, and I'm not paying $5.20. Well, interest rates are real low. That's very nice. I'm still not paying $5 for a Big Mac or $800 for an Xbox One. But. So that's how a quick and dirty way to tell if there's a bubble. You look at the price to income ratio, whatever that underlying income investment might be, the denominator. I know it's hard for you liberal arts majors. If you don't know a numerator and denominator, you can Google it. They got the Googs now. So that's how you would traditionally look at it. That's the quick and dirty. Find out what it historically trades at, look at its price to income ratio, and look at it where it is today and say, oh, fuck, that's overvalued. Oh, no, that's lower, or it's accurately valued. Currency and commodities are different. Because what do they generate in income? They don't. Timber does not shit out little pieces of wood. Gold does not fart out little pieces of gold. And your Ethereum does not make little baby Ethereums. That's it. That's all there is. There's this Bitcoin, there's this dollar, there's this gold brick, and it is static. Commodities, we want to separate commodities from currencies. Commodities have intrinsic value because they're used for something. Timber, you make a house. Silver and gold, albeit currencies in their own right, are also commodities. They're used in electronics. So there are industrial, commercial, and other economic uses for these commodities, right? But then when you look at currencies, it's like, well, how do you value a currency? How do you value a commodity? Commodity is purely determined by supply and demand in the market. 8,000 bushels a week, we only need 5, price of wheat goes down. But with currency, it's like, well, how do you value this? It's especially a fiat currency where it doesn't generate. I mean, at least gold and silver have an intrinsic value that they can be used for something down the road. But a dollar, a yen, an Ethereum, a Bitcoin, they are really purely tools of exchange, medium of exchange. Just purely, their only function is currency. So how do you determine it? Well, the only way, as far as my thinking can go, and I'll welcome any other ideas, is that you can only compare it to other currencies. And so what we have here is two ways, one blunt, one a little bit more savvy, to determine whether or not your currency is in a bubble. First off, I'll say it's impossible to determine whether a currency is in a bubble because it could be genuinely strong against other currencies, like the US dollar after World War II. I mean, it just jumped up. Why? We're the only fucking game in town. We're the only untouched country that had mass production still untouched. I think the Japanese got some bat bombs over us once in a while, but that was about it. Or the Germans may have sabotaged a little bit on the Atlantic coast, but we had the, so in that case the dollar wasn't in a bubble. So I would almost not even bother trying to figure out whether a currency is in a bubble or not, because this is not an investment, right? Understand right now, you're not investing. I love when people say, I'm investing in cryptocurrency, or I'm investing in gold, or my favorite, they just bought a house. It's a good investment. No, you gotta fucking live in the house, or you gotta rent it out. If you're renting it out, then it's an investment. But you just live in a house, is you like fucking paying whore money to your preppy little swipple wife there because she wanted granite countertops. There's no investment. You're gonna lose money. You will lose money on a house you live in. That's because you gotta pay rent. You're gonna have to, you either pay rent to a landlord who's gonna pass on his costs, or you just incur those costs yourself and you hope to God it's less than rent. Anyway, so these are consumption items. A house is a consumption. It's not an investment. So you don't have an investment. You are a speculator. You are hoping to God that the price of your Ethereum relative to dollars, yen, Bitcoin, or whatever else you want to trade it against goes up in value. So, how to tell if it's in a bubble? The first thing I would do, and this has one huge drawback, is I like to do a blunt direct comparison of global supply of currencies to one another. For example, Bitcoin, they said, what should the price of Bitcoin be? Well, a very simplistic, and there's many flaws with this, which I'll get to, one key one, is you take the world supply of dollars. I use the monetary base. I know people use M1, M2, M3, whatever. I'm using monetary base. It's 3.8 trillion. Hang on, I got my spreadsheet up. 3.8 trillion, okay? There will only be 21 million Bitcoins in the world. So you take 3.8 trillion, you divide it by 21 million Bitcoins, and you have $1 per Bitcoin. This is the real to the penny, to the penny. There is 180,952.38 cents of dollars for every Bitcoin. Now this changes. This is the kind of cool thing about Bitcoin. It's static. It's a limited supply. So as we print off more and more money, more and more dollars, I don't even want to say value, because it's not value, it's the relative supply of US dollars per Bitcoin is going to go up. Okay? You could say the value of the dollar is going down relative to the Bitcoin. I wouldn't say necessarily that the Bitcoin is going to go up in value, because it's static. It's going to stay the same. Okay? So this gives you a very theoretical price line. $181,000 per Bitcoin. What is it trading at? 2,000 now? This doesn't mean tomorrow everybody's going to go and bid up Bitcoin to $181,000. Why? Well, there are other currencies in competition in the global market to be a currency. There's real currencies like yen and all that other stuff. There's Litecoin. There's other cryptocurrencies, Ethereum, stuff like that. So it's relative. What is in more demand? What is going to become more of a used or accepted? What's going to become the standard? Now, like Betamax versus VHS, Microsoft versus Apple, Windows versus whatever else was versus Linux. Could it happen? The world all conglomerate says we're using this one global currency, Bitcoin. It could, certainly could, and this is why I think Bitcoin has a little bit of a premium on other currencies. It has first mover advantage. But this gives you kind of like, okay, here's the absolute relative supply of dollars. I'm not paying ever more than $181,000 for Bitcoin because that's what its actual limit is. But again, it's going to be much lower because other currencies compete. So that's kind of like your upper limit. The other thing, I think this is a little bit more practical, is you do kind of what we did historically with price to income ratios. We get a historical average going back as long as we possibly can. And this is a problem that you're going to face with cryptocurrencies. Traditional currencies, not so much, because we have a historical average. But cryptocurrencies have only been around less than a decade, all of them, I'm thinking. But you get a ratio. Right? What is the ratio of the price in dollars for one cryptocurrency versus another cryptocurrency? Or one cryptocurrency versus gold or silver. And what you get is a ratio. Now, if you want to see a perfect example, the most common example would be the gold to silver ratio. You say, what's the gold to silver ratio? Well, I don't know, we're comparing gold to silver. That's apples to apples, or apples to oranges. Well, let's convert them into their dollar prices and compare what they're trading at in terms of dollars, and then we're comparing apples to apples. So the historical gold to silver ratio on average, going back to about the 1920s, has been 55, ever so roughly. In other words, the dollar price of gold has been 55 times that of silver. And what traders would use is that, say, okay, the gold to silver ratio is 30. Gold is undervalued historically. I'm going to start buying gold. The gold to silver ratio is 90. I think it hit that in the Great Depression. Whoa, gold's a little overvalued. I'm going to buy more silver. And so you could come up with something similar for cryptocurrency. I'm not going to do it for you because you haven't paid me enough and I got other shit to do. You could come up with a Bitcoin to Ethereum ratio or Bitcoin to Litecoin ratio. You take their dollar values and compare that ratio, get a historical average, and then see what is it, okay. And the problem is, because it's just so new, you're not going to get that long of a track record. It's going to be at least 20, 30 years before you can get this average ratio going on and figure out what's going on to have this mean and then start trading off of that. But it's a tool. It's the only thing that we could really use right now in the meantime. I'm almost curious enough to go calculate it myself, but I'm too fucking lazy. And Lord Almighty, someone might even know. You know what? Let's Google. Let's see if it even searches if it's a thing. Bitcoin to Ethereum ratio. How many is Bitcoin Ethereum down? The ratio of Ethereum to Bit. No, I don't think. Here's a. That looks like someone's already got it. Ethereum, 2,000 Ether for 1 Bitcoin, which means they sell 1 Ether for 0.3. You got the ingredients, the makings of the ratio here. I mean, it's not. You can do division, so anyone with a liberal arts degree can do it. But anyway, but that's it. Just so you know, you're not investing, you're speculating. If the bubble, more recent, I can't say it's a bubble, but the most recent spike in Bitcoin, I think that was due to that ransomware, and they demanded it, and that provided a boost in demand, and then there was a little bit, oh my god, I want to get Bitcoin because it's going up more. Just be aware, you're not. There's no underlying income. There's no underlying dividends or earnings or interest payments that come from owning a currency, crypto or not. And you're lucky. That's how if you have no experience and you made money, you're lucky. And if you have tons of experience investing and you made money, you're also lucky. There is so much chaos and randomness. This is why I admit when I'm an economist, I say, none of my predictions will come true. I'm going to be completely wrong because I just know it. Economists and financial analysis, it's all basically to explain what happened in the past. That's basically all. It's like therapy. It's like, well, why did this happen? Well, here's why it happened. Oh, okay, I have closure. That's really what economics and finance is. It's fucking worthless for predicting the future, which is why I have an increasingly less and less respect for finance and economics. About the only thing you can do is teach history with it and philosophy. That's about it. So anyway, hope that helped out. If you guys got questions, go to assholeconsulting.com, where I, the world's only professional asshole, will give you the advice you need. It is a paid service. You can check out my website, captaincapitalism.blogspot.com. You can listen to the Clarity podcast. That's on soundcloud.com. And get my books. Bachelor Pad Economics, Worthless, Curse of the High IQ, Reconnaissance Man, The Black Man's Guide Out of Poverty. There's another one in there somewhere. Oh, Poor Richard's Retirement. That's the new one. I was like, what? I did more than that. Those are all available at Amazon. We'll see you guys later. Tools.